Well, the stock market got absolutely hammered today. We saw a brutal, accelerating sell-off, and the main culprit, a violent energy shock that sent ripples across the entire globe. Okay, let's dive right in and break down exactly what happened. So, let's start with the big one, the S&P 500. It just tumbled, dropping 1.52%. That's over 103 points gone, closing at 66.72. And you know, the selling pressure just got heavier and heavier in that final hour of trading. It felt like investors were just racing for the exits, dumping risk assets left and right.
And the Dow? Yeah, it was no different. It plunged nearly 743 points, that's a 1.56% drop, to finish the day at 46,674. A really rough session all around.
But the tech-heavy NASDAQ? It really took the biggest hit of all. We're talking a drop of roughly 404 points, a really steep 1.78% decline to close out at 22,311. So what on earth caused all this red on the screen?
Well, the primary catalyst was a massive, violent spike in the energy markets. With the conflict in the Middle East showing absolutely no signs of slowing down, and that crucial Strait of Hormuz staying shut, Brent crude shot past $101 a barrel, and that just sent a shockwave of fear through global stock markets.
But here's where it gets interesting. Not everything was bleeding red. One energy giant actually bucked the trend, pretty much acting as a hedge against all the chaos. So let's kick off our first deep dive with Exxon Mobil.
Now check this out. While the rest of the market was cratering, Exxon's shares actually climbed 1.31%, closing at over $153. I mean, that is just massive relative strength. So, what was the driver here? What was going on?
Well, it's actually pretty straightforward when you think about it. You've got surging oil prices and a critical shipping lane completely shut down. So what do investors do? They scramble for a direct physical hedge. And the answer? Buy the company that literally owns the oil. It's as simple as that.
And this quote just nails it, doesn't it? It perfectly illustrates what the market was thinking today. When a geopolitical crisis hits, investors want tangible, real assets. And Exxon delivered exactly that.
Okay, now for a complete change of pace, let's pivot to a totally different story from a different sector. Our second deep dive is all about a really bold debut from a top-tier Canadian space tech company, MDA Space. Get this, on a day of absolute market turmoil, MDA Space successfully launched its $300 million IPO. I mean, they made their trading debut on the New York Stock Exchange in the middle of a sell-off. That's a truly audacious move.
You have to picture it. The company's CEO is up there ringing the opening bell as markets are just plunging on war fears. The success story proves that even in a panicked market, there's still a ton of cash and investor appetite out there for the right kind of long-term, big-picture growth stories. And this really gets to the heart of it. It highlights such a fascinating dynamic, right? Even when things on Earth feel completely chaotic, that human ambition to explore and commercialize space, well, it can still capture both capital and imagination. Okay, but for every winner today, there were a whole lot of losers. Our final deep dive looks at a key bellwether for the capital markets, a company that felt the full force of today's sell-off, Goldman Sachs. Ouch! Goldman Sachs shares got hammered, dropping a painful 4.4% to close around $787. This move alone was a huge drag on the Dow Jones Index. So why did the financial sector get hit so hard? Well, as the reality of $100 oil really started to sink in, investors realized something pretty scary. A sustained energy shock could reignite inflation and just slam the brakes on economic growth. And that kind of macro volatility, it effectively freezes the lucrative M&A and corporate deal-making pipelines that investment banks like Goldman absolutely depend on for their revenue. And there you have it. That's the direct connection. High energy prices create massive uncertainty, and uncertainty is the absolute enemy of the huge corporate deals that fuel Wall Street's profits. So how do you pull all this together? How do you sound like the smartest person in the room tomorrow morning? Don't worry, I've got you covered. Here are your key takeaways. First, on Exxon, it's all about its unique position as a safe haven. Here's exactly what you say. With the Strait of Hormuz closed and oil hitting US $100 per barrel, energy names like Exxon are basically the only things showing green. It is effectively the only insurance policy working right now. Next up, on that wild MDA debut. The real story here is the signal it sends about the market.
Here's the take. It is seriously impressive that MDA Space managed to debut its US $300 million IPO on the NYSE today of all days. Shows that there is still institutional capital ready to move for the right long-term secular growth opportunities.
And finally, for Goldman, you want to connect the big macro picture directly to their business model. Here's your insight. Goldman dropping 4.4% today is a stark reflection of the broader market sell-off. No CEO wants to ink a massive merger or acquisition when the macro picture is this volatile.
Goldman Sachs dropped over 4% today, as the oil shock threatens to freeze the corporate deal-making pipeline. So my question to you is, are you avoiding financial stocks until the geopolitical picture clears up? Comment below. Subscribe to Market Fluency for your daily edge.